Well, the markets were down again today, but you guys know at this point that means I'm out there buying stocks. So today, I'm going to share with you a company that I'm really excited about, not just for this year or the next year or the year after that, but for the next 5 to 10 years. It's a company that's actually doing real AI. We talk about all the time how we've just rebranded big data and data centers as the buzzword AI, and we've kind of just pushed to the wayside what real AI is, which is AI at the edge, AI that makes a difference. That's where the money's at. That's where the next round of investment is going in our country, in my personal opinion. So I'm heavily focused on edge AI, and this is just another company that's doing exactly that today, that is profitable and is doing billions in revenues. And their revenues are going to grow 20 to 30% plus. The reason why I'm buying right now is because I believe the markets are wrong. I think investors get confused and they think that opportunity is found in chasing hype rather than it being found when the markets are wrong about something. And just yesterday, we talked about that in the video, and I got 3 comments that I want to address really quickly here. The top one says, someone tends to be over optimistic about everything, just be careful. They're talking about me. They think I'm always over optimistic, and I think everybody should have a bullish bias because in the hundreds of years of history we've had in the stock market, it's always paid to be bullish and buy every dip. But that's really not even true what this person said. On January 27th, I talked about the AI stock market crash. I was bearish on the stock market starting on January 27th. And then I talked about this trade war that might cause a stock market crash on February 17th. Now, this was a members only video, so that's my bad. I actually made it to be a public video. I just didn't think it would get the views, so I kept it a members only video. But you can go back and look. January 7th, sometime back here, we're down 7% since then. And I guess February 16th or 17th was on a weekend, so we'll start there. Since the tariff war video, the NASDAQ is down basically 10%. So I'm not always overly optimistic. I try and tell you, I give you my analysis on this YouTube channel. It's not always going to be right. Sometimes it's going to be wrong, but I'm just going to do the best I can. The second comment, this flows right into it. This person says, the markets are never wrong. We need to think about this. If you truly, and this got 7 thumbs up, which is kind of eye-opening to me. If you believe the markets are never wrong, how do you explain why investors have opportunities all the time? If the markets were always right and we're correctly predicting events that were going to happen in the future, opportunity wouldn't exist for investors. Think back to 2022. When the markets sold off because they were anticipating this recession to come. That recession never came. So we have a great example of this just 2 years ago of the markets getting something wrong. And the people that were buying stocks in 2022, like myself, that led to a lot of gains for us. So this saying that markets are never wrong, that's completely flawed. Lastly, Cousin Eddie said, homie is giving financial advice with a community college degree. I don't even know why I'm giving this one the time of day, but I'll address it. On this channel, I don't give you financial advice. I give you my market analysis, my economic analysis, and my stock picking analysis. That's all it is. This isn't advice. I always say I don't have a crystal ball. I'm going to be wrong, just like everybody else is going to be wrong. No investor is flawless. If you think you are flawless, you're sorely mistaken. Everybody makes mistakes in the world of investing. But the last part, I actually did graduate from a top 10 business college in the United States of America with a major in finance and minor in accounting. I graduated half a year early. I generally say that college was kind of a waste of time for me, but for the sake of having the degree to push back on this comment, I guess it was worth it. I've always been self-driven. A lot of the stuff I learned in college, I already knew because I've just been fascinated with the stock market and the economy for so long now. But yesterday, just to give you a quick review before we talk about the stock I've been buying, what are the markets getting wrong? You know, the item that set off the frenzy of selling in the stock market has been these concerns about the economy falling into a recession. And people looked at that at the Atlanta Fed GDP estimate of negative 2.8% growth that the Atlanta Fed is projecting for Q1. And this Monday, this Tuesday, the stock market sold off in a big way just because of that GDP estimate revision downwards. A lot of people stopped their research there. A lot of people don't realize that there's more research to do. The reason their GDP estimate fell is because of all of the corporations in our country front-running Trump's tariffs. So we had a massive spike in imports while our exports remained the same, and imports subtract from GDP. Exports add to GDP. So if that trade imbalance grows, it actually puts negative pressure on GDP. But that isn't necessarily indicative of a structural growth problem in our economy. It's a one-time aberration based on corporations simply trying to front-run tariffs. So if the markets are wrong in anticipating a recession right now, just like they were in 2022, and fun fact, back in March of 2022, which is what this chart shows you, we had a negative GDP estimate. And we actually did have negative GDP growth in the first quarter of 2022, which was what kicked off everybody's concerns about a potential recession. But they didn't realize at the time that that also was caused by the trade imbalance growing short term. Now that we're past all of the corporations trying to front run the tariffs, Trump has been inaugurated. He's our president now. In the coming months, this trade imbalance is going to narrow, which is going to put upwards pressure back onto GDP. And if we're right about that, the markets are wrong about, well, the economy's current state of affairs. Now, yeah, there's uncertainties out there. There's things to keep an eye on. There's things to worry about. But at the end of the day, you know, since Trump's been in office, there's been $1.4 trillion of private sector investment that's been announced that didn't exist under Biden. Sure, you know, fiscal spending getting cut, that can put negative pressure on our economy. But the other side of the coin is the private sector. If private sector investment picks up, that's going to make up for any slack that's caused from fiscal spending getting cut. Now, again, that's why I love when the markets get something wrong, because it presents these opportunities. If we look at investor sentiment right now, investor sentiment is as low as it was during 2022, and it's actually lower than it was back in 2020, when literally the global economy shut down. This is actually a bullish indicator from a contrarian's point of view. When most people are bearish, we should be bullish. The bottom chart here shows you 57% of investors are bearish right now, while only 19% are bullish. That should speak volumes as to the current, mindset of investors out there, which just makes me believe that now's an even better time to buy, because everybody's trying to get their hands off of equities as fast as they humanly can. Now, regardless of whether or not the tariffs do send us into a recession, or a recession's knocking on our door because of a decreased unskilled labor supply, if there's less immigration, things like that, the company I'm talking about today, Symbotic, actually benefits from tariffs, and it benefits from less immigration, from less unskilled labor being available. This is a company that is modernizing warehouses. They're automating warehouses. Their biggest customer by far is Walmart, and Walmart owns 11% of this company. SoftBank is another major investor in Symbotic. And Symbotic's CEO is a billionaire from America. Now, before I go deeper into talking about this company, I gave you some cliff notes there. I just want to say thank you for all the growth on the YouTube channel. We're quickly approaching 40,000 subscribers. That's awesome. I love seeing all the new faces pop into the YouTube channel. Thank you guys so much. If you are new here or returning and not yet subscribed, please subscribe down below. And as always, you can get early access to my stock picks, my brain. You get access to the members Discord server. If you're interested in that, hit the join button located right next to the subscribe button, or hit the Patreon link in the pinned comment. I'd love seeing you guys join the membership so I can talk to you guys individually and get to know you better. Without further ado, let's jump into this. So on the screen here is just a quick excerpt from Symbotic's most recent quarterly report that demonstrates how tariffs are generally pass-throughs to their end customer. A lot of the deals that Symbotic has signed, which most of their business comes from Walmart, they say it here. For each APD, which if you want to know what that is, it's accelerated pickup and delivery systems, Walmart will pay Symbotic the cost of implementation, including the cost of material and labor, plus a specified net profit amount, and they'll pay Symbotic for software maintenance and support. And they'll pay Symbotic for research and development fees relating to the generation of prototypes and other research and development, yada, yada, yada. We'll talk about this acquisition a little bit, but not only is Walmart a customer, Symbotic actually acquired one of Walmart's subsidiary businesses that actually adds $300 billion of a target market to Symbotic's business model moving forward. But this acquisition cost Symbotic, they had to pay Walmart $200 million. And at the close, Walmart turned around and paid Symbotic $203 million. And they have an additional $165 million that they'll pay to Symbotic 1 year after closing, and an additional $125 million 2 years after closing. This is incredible. Here's the press release that talks about it. Symbotic to acquire Walmart's advanced systems and robotics business and sign related commercial agreement. Walmart has selected Symbotic to develop, build, and deploy an advanced solution that automates its accelerated pickup and delivery centers with an initial order covering hundreds of stores. They talk about it here at the bottom of this press release. Currently, Symbotic is deploying its software and robotics platform across all 42 of Walmart's regional distribution centers. Every single one of Walmart's regional distribution centers has Symbotic deploying their software and robotics platform into. That is a great customer to have, and that endorses what Symbotic can provide for customers of theirs. Now, with this acquisition, they say it's a natural extension of this work, and it allows Walmart to utilize its stores to fulfill e-commerce orders through pickup and delivery more efficiently, economically, and accurately. And approximately 90% of the U.S. population lives within 10 miles of Walmart's more than 4,600 stores. Their store-fulfilled deliveries grew 50% year over year, surpassing a $2.5 billion monthly run rate. The future here is so bright. And again, this is one of those AI companies that the markets are kind of forgetting about. Because for whatever reason, it's not sexy. It's not this big data center AI play. It doesn't have much tie to NVIDIA, which has been, the stalwart of the stock market, but that has led to an incredible buying opportunity for this company. Without going further into this, we should discuss the market cap and the current valuation. Currently, the company's valued at just below $13 billion. Not long ago, this was a $60 stock. So December of 2023, this stock was trading for $60. They've done almost $2 billion in trailing 12-month revenues with a quarterly revenue growth of 35%. They bring in gross profit, and these EBITDA and net income numbers are actually somewhat misleading on the trailing 12 months. They've actually reached the point of cash flow positivity. They say this here in the investor presentation. They're cash flow positive over the last 12 months, and they're expanding their adjusted EBITDA margins. So this is not a company that has any risk of bankruptcy, especially when you consider the big money behind this company, SoftBank, Walmart, and the billionaire CEO and founder of this company. I encourage you to do some more research into the CEO of this company. But very, very impressive. A $22.4 billion backlog currently, 44 systems in deployment with 29 completed sites and 10 different customers. This is the biggest risk for Symbotic. To deploy, to automate a warehouse, it can cost billions of dollars. And that's why Walmart is giving Symbotic billions of dollars. But not every business, actually most businesses, don't have that sort of money at their disposal to automate a warehouse. This CNBC article here talks about it best. Symbotic recognizes this, and they have a joint venture now with SoftBank, and they named the business Greenbox. This article talks about it here. I'll leave a link to this in the description down below. I encourage you to read this whole article. It'll give you a better idea of Symbotic as a whole, but they actually give you some of the details here. SoftBank owns 65% of the Greenbox venture, which means that Symbotic owns the other 35%, so they can claim Greenbox's 35% of their revenues and incomes. And this joint venture has agreed to purchase $11 billion of Symbotic software and follow-on services over the next 6 years. So their backlog we talked about is close to $23 billion. So not only does Symbotic get 35% of this joint venture's revenues and incomes moving forward, but they also get the hardware and software sales to automate these Greenbox warehouses. Greenbox is basically a warehouse as a service company, where instead of paying to automate a warehouse, smaller corporations, smaller businesses that need warehouses will pay Symbotic or the joint venture a fee to use the automated warehouse. And that still makes a lot of economical sense to businesses that have to utilize warehouses because of the efficiency gains they get by using an automated warehouse. This slide on the investor presentation shows you all of the large addressable markets under their arm currently. They're going to keep acquiring businesses, and they're going to keep growing these total addressable markets. And these addressable markets are just going to continue to grow themselves. So again, strong tailwinds at the back of this company. Their in-house business has a $432 billion addressable market. Greenbox has a $500 billion plus addressable market. And their micro fulfillment, which they added as a result of their Walmart acquisition, is an additional $300 billion plus addressable market. So if you combine all of these things, Symbotic has a total addressable market of more than $1 trillion. I'll show you my price target spreadsheet towards the end of this video, but you'll see that I think this company should be trading for much more than it is currently. Now, Walmart is a huge percentage of their business. Like 90% of their revenues come from Walmart currently, but they also have some other customers that you'll recognize. Albertsons, and then C&S Wholesale Grocers is the largest wholesale grocery distributor in the United States of America. And the CEO of Symbotic is actually also the owner of C&S Wholesale Grocers. But this is really exciting stuff. They talk about the Green Box joint venture here, the 6-year, $11 billion contract where Symbotic has 35% ownership, and it unlocks a $500 billion plus annual total addressable market. Absolutely huge. This, if AI really goes where we think it's going to go, this company is going to appreciate in value faster than most companies will in the stock market. Page 19 shows you some of their financial highlights. They have a visible growth profile at scale. I continue to expect they'll grow their revenues at least at 25% year over year over year over year. Highly visible growth underwritten by a $22.4 billion contracted backlog. High margin annual recurring revenue base building over time from software and parts and services base. They're generating positive EBITDA with margin upside, and they have a strong balance sheet with free cash flow generation. Again, the risks here are minimal. Even if AI doesn't really take off the way we think it will, the risks are limited with a company like Symbotic, who has business contracted with Walmart through 2029 and more than likely far past that point. Now, another tailwind for Symbotic moving forward will be their deployments into the international markets. For the most part, they've been deploying systems in the United States of America, but just recently they announced an agreement to implement multiple industry-leading warehouse automation systems for Walmex, which is the Mexican subsidiary of Walmart, of course. And they announced a strategic international expansion in Mexico. So again, if Symbotic is good enough for Walmart, who are they not good enough for? This industry is still young. This company is still young. It's really yet to explode. Yet already the company's doing billions in revenues every year. This gets so exciting to me. And then one last acquisition I want to highlight here before I get into the price target spreadsheet is their acquisition of Veo Robotics. They acquired this company for $8.7 million in July of last year. I think they've probably already gotten more value out of this acquisition than they paid for it. You can do your research on Veo Robotics if you're interested in investing into this company, but this is a massive acquisition. Basically, they make it safe for robots in warehouses and human workers to work in the same cubicle, essentially. This is a 3D depth sensing vision system that will halt robots wherever they're at if a human approaches their work area. It's huge, and the future for Veo Robotics is awesome. And this is going to add it's going to add more value to what Symbotic can provide. And I think the best part is that Veo Robotics management team jumped on board at Symbotic. So the future is very, very bright for not only the old Symbotic, but a lot of the acquisitions they're making. Very, very bright future. Now, moving to my price target spreadsheet, this is available in the Discord server to the members if they want to download it and change some of my numbers to come up with their own price targets. But I give you my revenue estimates for the company. I have them doing $2.3 billion this year, $3.1 billion the next year, $4 billion in 2027. And then by 2035, I have them doing $17 billion. And as this company's revenues scale up over time, so will their margins as they get recurring software revenue on all of their deployments and recurring operational services revenues on all of their deployments. And their systems margin continues to expand. And then the recent earnings call, they talked about how their margin on their systems deployments are going to increase over time. Just a lot working in the company's favor right now. So their gross profits are also going to keep expanding, which means the net income that shareholders see at the end of the day is also going to increase dramatically over time. By 2035, I have the company bringing $4.7 billion to the bottom line for shareholders. They can do with that what they want. They can reinvest in their business. They can buy back some shares. They can issue dividends, whatever they want to do. Bottom line, though, based on next year's numbers, which usually is what you do when you set price targets, you focus on the coming 12 months. I think the fair value for the company at a pretty conservative forward PE multiple of 25 is around $44.85, which means right now this company, in my opinion, is more than 100% undervalued. AKA, I think their share price would have to more than double in order for this to be at fair value for me, in order for me to stop buying this company. Now, obviously, with young industries and young companies, it's really, really hard to forecast things 10 years in the future. I always try and do my best, but these numbers are going to be wrong. They're not going to be right. I would guess, actually, I'm going to be on the low side when it comes to revenues, especially if Symbotic, their green box joint venture succeeds. I think the revenues could explode by even more than $17 billion annually. And one other caveat here is I wish Symbotic's cap structure was a little more simple. I mean, I spent hours today just trying to understand their cap structure. They have three different classes of stock outstanding. Some of them are voting shares that vote 1-to-1 with the common shares but don't have economic rights. Another vote 3-to-1, and then you just have the common shares. But those voting shares without any economic rights, they can convert to common shares over time, which is why by 2035, I have 500 million shares outstanding of the company. It's just another one of those things that's going to be really, really hard to project. I hope I'm kind of in the ballpark there, but over time, dilution is going to happen just as those Class V, those voting shares convert to Class A common shares. Dilution will happen, but at the end of the day, by 2035, I still expect to 10x my investment from here. At a conservative forward PE multiple of 25, I think the fair value for the company in 2035 with 500 million shares outstanding would be $236.75. Well, like I mentioned, this company it's relatively recession resilient, I guess you could call it. Because by them automating warehouses, if the next recession causes a huge wave of unemployment, well, it's automizing warehouses that actually fill the gap of losing unskilled labor. And again, that's why this company actually benefits probably from less immigration, less unskilled labor available. It actually pushes these large companies to automate their warehouses even more if they're going to struggle to fill those unskilled labor roles. And again, in their conference call, they talked about how any tariffs that do hit them will just be pass-throughs to their customers. I showed you their agreement with Walmart for their APD business. It's cost plus a net profit that their customers pay to them. Their revenues are growing at 20, and that's the other thing I should mention. My $17 billion revenue estimate actually assumes from 2027 onwards, the company's revenue growth slows down to less than 20% compounded annually, which I think is probably conservative, but I need us to get closer to 2030 before I can really start to make a better guess on that. And I'd rather be conservative than too aggressive when it comes to my price targets, but just keep that in the back of your mind. I think, with a conservative price target over the next 10 years, I could 10x my investment in this company. That's crazy to think about. And if the company grows their revenues at 25% CAGR or 30% CAGR until 2035, these numbers can get really, really special really, really quickly. And that's saying they're not already special, which I think they are. So yeah, moving forward, as they sign on additional customers and increase their business with Walmart, that Walmart being your largest customer is a really good backbone for the company when they're trying to sign on new customers and new companies. They can spotlight the work they've done with Walmart, and they can spotlight how Walmart wants to do more work with them moving forward. And that's a great endorsement of what Symbotic provides. So let me know your thoughts on this company down in the comment section below. I'm really excited about it. It's one of those companies, the markets, they just keep selling it off because they're worried about a recession, but they don't realize, well, the recession is probably going to be another no-show. But also, if we do see a recession, a company like Symbotic actually probably benefits. Walmart is not going to pull back their spend on automizing their warehouses. It's not going to happen. They have a contracted backlog. They're going to deploy these systems for Walmart through 2029. And then on top of that, we've now added the Walmart's APD business, which Symbotic just acquired. I don't know. I could talk for hours about this company. This video won't even do it justice. So if you have any questions about the company, let me know down in the comment section below. Be sure to do your own homework, your own research and due diligence. But with that, I hope you guys have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.